Hey traders, how's it going? It is Sunday, April 17th. Happy Easter to those who celebrate. If not, I hope you enjoyed the 3-day weekend that the market has afforded you. I hope you have rested, recuperated, and gotten ready for what is going to be a interesting week of trading. So what I'm going to be doing is giving our weekly view. We'll talk a little bit about last week's action just as a refresher for those who may have forgotten about some stuff, because there's going to be some interesting things coming up here this week. We've got earnings. We've had a few headlines over the weekend, nothing too crazy, but this market does feel like we are almost poising for another leg down. So diving on in here, starting with the SPY, no surprise to anyone, what we've seen. We've had that nice little bear market rally, and now if I do a little retracement here, we've hit the 50% retracement on the Fibonacci's perfectly in the SPY. That is the lower half here, that support of last week. So a little bit of a technical level for us to be holding, kind of just dancing through the 50-day, not even really paying it much mind. We did kind of stay below this inflection point here in the SPY, nothing too serious, but we are also below the 20 and the 200. So right now, short-term momentum is to the downside. We are still making kind of that lower move. We spent most of last week in that trading range, despite headlines, despite earnings, despite a lot coming out. We kind of continued to really just chop and grind. Qs and tech, meanwhile, obviously weaker. I say obviously because when I pull up rates, I think we'll all understand why tech is weaker. Qs sitting at that 61.8% retracement, so definitely on the lower end here in terms of the retracement level. If they are to bounce, this is we don't want to see the market. If you're looking for the market to bounce, Qs first of all, you don't want to see them start moving lower. They've got some space here until we hit that next support level inflection point. But they held kind of this January low here fairly nicely, pretty big level that goes back all the way to last spring. If we do bounce here, get above the 50-day, then maybe we're going for this gap fill. Who knows? But right now, momentum is, like I said, still to the downside. And Qs obviously definitely weaker because look at tech. Rates obviously exploding. Have a monster move here. We've got a more hawkish Fed. We've got not only that, we've got a more hawkish a lot of central banks out there, minus the ECB, which is still buying assets until something like Q3. They're doing their own thing. God help them. Bank of Canada hiked 50 basis points. They're starting their QT at the end of the month. Bank of Korea unexpectedly raised rates. You've got a lot of banks out there starting to tighten and starting to raise rates. Meanwhile, China cutting their reserve ratio. They're actually running out of easing tools in their disposal. Their zero COVID policy lockdowns continuing to strain that economy, so they are not going to be the economy to bail out the global markets and global economy. TYX exploding, and the TYX getting through a level here that one of our viewers, Mal, pointed out this goes back even prior to 97, this descending high. So we're really starting to see the bond market start to feel the pinch here. If you pull up high yield growth, those are jumping off. Junk looks exactly the same. So the bond market, stock market, still a little dislocated here. So maybe the stock market will start to play catch up. We had a lot of obviously hawkish statements from a lot of Fed governors. You also had some weird dovish statements from some Fed governors as well. But I don't think the market's paying that any mind now. We have just under 3 weeks, about 2.5 weeks until the next Fed meeting. In that time, what do you think rates are going to do? I think that could dictate a lot of what we could expect from the market. Do we think that rates could do what we did here going into the last Fed meeting, where we see a little bit of a rest period? Definitely possible. Rates getting a little hot here in terms of velocity, but we're just going to have to continue to monitor the rates, because that is going to be a big deal to watch. So like I said, market closed at the lows here, so I think a lot is going to ride on where we open on Monday. If we gap down, be careful, we may have gap rules apply. We have seen a decent amount of selling out there from big firms, institutions, hedge funds. So the question is just going to be, where do we see the big money continue to push into? Is it going to be rotation, or is it going to be defensive in nature? We had headlines out there like Blinken saying that the war in Ukraine could very well last through the end of this year. And if that's the case, you're going to continue to see some interesting and painful things out there for the global markets and the economy. No further real headlines, though, from Russia-Ukraine. A lot of posturing, a lot of rhetoric, yada, yada, yada. Nothing there to move the market. We need some substantial movement and changes there for the market to pay any heed to that. We're starting to price in expectations. You had survey results out there from University of Michigan Sentiment Survey. Had a very large surge, but inflation expectations and buying expectations still at their extremes in the wrong direction. So there's going to be some interesting stuff. This week is going to be very quiet with economics, which is going to be a big deal. Monday, pretty much nothing to worry about in terms of economic Tuesday, meanwhile, you'll have housing starts and permits. Who cares? Wednesday, you'll have existing home sales. Who cares? We are seeing housing affordability reaching levels we haven't seen since 2008. So that is definitely not a good sign. 20-year bond auction in the beige book. Thursday, Philly Fed manufacturing, 5-year tips auction. And then Friday is the PMI composite flash. So generally a quiet week from the economic side of things. We obviously also have to listen for Fed governors. I do know that Thursday we get a speech from Jerome Powell. He's speaking at some kind of thing at this is actually pretty fitting, the Volcker Alliance and Penn Institute for Urban Research special briefing. We'll see if he says anything there. He also has a speech at the International Monetary Fund debate on the global economy on Thursday. So Thursday going to be the bigger deal where we hear from Daddy Powell. Perhaps we hear from some of the other smaller Fed speakers throughout the week as well. But that is, that's kind of what we're seeing there. So definitely need to watch the market action. We also need to be watching volatility because volatility is not doing the equivalent move, and that should make you maybe a little cautious on this downward move. Market sitting here at lows, but meanwhile VIX is pitiful. It's dead. It's not elevated. So we're not seeing the equivalent puts and options action going on. So just be cautious on something like that. We need to monitor the VIX continually, even though volume's hanging out in there. Now we did also get through options expiration, so maybe now that we've kind of slopped off some of that gamma, maybe the market is going to be a little more free to move, and maybe we see a little bit more options activity pick up this week. VXN, the tech volatility, pitiful, nowhere near the high. So definitely going to be watching volatility this week. This is going to be a very telling week, I think, in terms of that and that divergence that we're seeing. So the next level on the SPY, maybe you see a little break here, but I think really your next support is going to be around these January lows where we're already seeing tech start to test. It's a nice little support level here in the SPY. Definitely something I'll be watching, and then I'll be watching this dip buy down here that we've had at the lows for the year. Again, short-term momentum definitely to this downside, long-term momentum still to the downside, but we'll see if this just becomes a bit of a chop fest in here. Now, that's the market. That's what we're seeing there. In terms of some of the commodities out there, oil really starting to pick back up. I see no bearish reason in the long term for oil to go down unless OPEC finally decides to step in. But if this war continues, we could continue to see escalation in terms of energy pricing. There could be a short-term pullback, in terms of just short-term market action. Gold, however, another hedge continuing to pick up as well. That really tells you safety trades starting to pick back up, and we're seeing the commodity plays really start to elevate again. We had a lot of very hot, inflation prints continuing to pump through. And then, the dollar's doing the same thing the dollar's been doing, which is strengthening. They're tightening. Who's going to be investing in a European currency right now with everything they're facing? China's having their issues. So the dollar is going to continue to see that strength fundamentally. There's just too much going on outside of us to allow the dollar to get in compression, despite, this is a pretty hefty move for the dollar. And crypto, well, crypto's continuing to move with the market. So long as it continues to move with the market, it is dead for me. I don't give a shit. And that's really your market, your commodities, and everything else that we're seeing out there. Taking a look at, some of the earnings coming up this week, and then I'll talk some of the stocks and sectors because there is so much in play if you are a short-term trader. I don't care if you're bearish, bullish, or whatever. There's so much opportunity. But we are going to wrap up some of the financial earnings this week. Monday, we're going to start small, something like Bank of America in the morning, Charles Schwab, Synchrony Financial. Monday after the close, we do have JB Hunt earnings, which could be pretty interesting. Look at the nice little dive they've taken. We've seen transportation issues with JB Hunt, with the railways, so I'm very curious to see because there is a potential talks of a recession in the trucking sector coming. Definitely something to pay attention to. Tuesday morning, other than some other financials, we have things like Lockheed Martin, definitely someone who is benefiting from the Ukraine war at the moment. Johnson & Johnson, who's definitely picked up along with the rest of healthcare. Hasbro, a little bit of a retailer. Halliburton, which is on an absolute tear along with oil. And then after the close on Tuesday, we've got our first really big tech earnings, Netflix. Now, Bill Ackman had a nice little investment in Netflix in here. We'll see if that's going to pay dividends for him already or if, Netflix is going to fall off. Disney did have good subscriber numbers on their last earnings statement. So let's see if Netflix can, kind of reverse the course of their last earnings play. I doubt it. A lot more people have been talking about cutting the cord with Netflix, especially with this whole talk of charging people for sharing passwords. I don't have high expectations for Netflix, but we'll see. IBM also reports Tuesday after the close. Wednesday morning, you've got a couple more healthcare companies, Abbott Laboratories and Anthem, two very interesting companies doing two different things. Procter & Gamble, little consumer discretionary, consumer staple rather, playing on Wednesday morning as well. And then Wednesday after the close is the quote-unquote unofficial start to earnings. You have Alcoa earnings, but guess what? We also have Tesla earnings. And I'm very curious about these Tesla earnings. Obviously, we have some very big Tesla bears in our community, and it's going to be interesting with the Shanghai factory still closed. They are missing out big with this COVID lockdown in China, and it could potentially hit them pretty hard. So I'm going to be very curious. I'm going to be watching these Tesla earnings like a hawk. I'm sure many people will. Kinder Morgan reporting. They're also going to be reporting CSX. United Airlines. We're starting to get some more airlines in here. We did see Delta on a nice little tear after some of their numbers, and some others in there. Thursday, American Airlines, AT&T, some more energy companies. Nucor, which has been running lately, Philip Morris, if you want to play that cigarette play, UNP, looking at the railroads, and Thursday after the close is Snapchat, tech stock staying compressed here. Friday, you have American Express, looking at some of the card makers, CLF, Newmont, and Verizon. So we're getting a pretty interesting, diverse range of earnings this week. It's going to be very interesting to watch how these different sectors are faring. Some of the earnings that we had last week that gave us a little look. Delta, Delta had some solid earnings, and that helped them pick up. They did have some good plays in there. Some of the better plays were on some of these sympathy plays like Airbnb, and maybe some of like Hilton or some of the other reopening plays that ran along with them. Even the cruise lines picked up. I don't expect this elevation to stay. Airlines are generally shit to own long term. They don't really do much, and just with everything going on, I just don't want to own them. But good start to the earnings there. You also had United Health, which had good earnings, but they couldn't maintain their gains there. But that was a big healthcare company that also reported earnings, something to watch there. And Taiwan Semiconductor had earnings last week. That's going to be interesting because they had good earnings. They did. They had good earnings and they had good guidance. They sold the hell out of those earnings. And so you have a lot of bag holders. You have a lot of people that don't want to be holding this risky tech bag right now. And you're seeing the equivalent move. Look at Nvidia sitting back at lows. This one feels like it wants to fall off a cliff. God help you if you buy them. You have, even like AMD and Micron. They look very weak. AMD breaking new lows at the end of the week here, and Micron doing the same, really starting to move down here. So the semiconductor and tech sector look abysmal. I think a lot of that also has to do with China lockdowns, as well as just tech being weaker in general with the raising rate environment. So that's the kind of the first firing of them that we saw. And obviously we've talked about the financial earnings. Interesting little mixed bag in there with some of them. You had guys like Goldman Sachs doing well, didn't hold their gains. You had others who did okay. So the financial sector showing a little bit of shakiness, a little resilient thanks to trading numbers and commodity numbers, obviously, but there's a lot of stipulations within those earnings that we talked about. Some of the other stocks in play. Look, if you're not playing Russia plays, you're not watching Russia plays, you're missing out. And what do I mean by Russia plays? The same ones we talk about every single day. The commodity plays that are going higher and whose prices are rising due to supply chain disruptions and the Ukraine-Russia war. I'm talking BTU. Look at coal. Coal had just had a monster week. Now, can it do this again this week? It could. Will it? We'll see. It had a nice little string of gains here earlier in the beginning of March. So, coal breaking out. Mosaic, this is definitely one I'm watching to continue to show strength. This is the fertilizer company. You also had the largest fertilizer producer in the U.S. cutting shipments to the West by 20% because of railway issues. So fertilizer is going to be a sector or a commodity that is going to have some broad impacts on the global food crisis and a lot of issues this year because of the fertilizer crisis coming from those countries. So definitely continuing to watch Mosaic. You could continue to watch energy plays. Mike's been watching Cleveland Cliffs, waiting for that one to wake up. You could watch, small ones like HPK is a small price gas company that took off. All sorts of ones like that. You also have the food plays, DBA and wheat, those guys are starting to pick up. Corn continuing to pick up, especially with the ethanol change to gas that Biden enacted to try to combat rising prices. Uranium continues to be strong. The defensive plays, look at Raytheon breaking out. Lockheed Martin staying strong. EQT, if you look at liquid natural gas companies, this stock took off. Now you're late to the party. I would not be buying up here, but there are others. LNG still holding up. There are plenty of liquid natural gas plays. And CrowdStrike, we talked about this one 100 times. It finally broke out. Let's see if that strength can continue in the cybersecurity space. There were so many plays and opportunities in this sector and in just these commodity plays. The miners are picking up again with gold picking up. So like GDX starting to break out. There's a lot of opportunity in here. If you're missing out on some of this stuff, you're missing out on what is some of the best opportunity in the markets. And if this war continues to the end of the year, these plays may not be done for a while. It's going to be very interesting to watch. Some other stocks that I'll be watching. Let's talk about some of the quote-unquote spec plays or more ones that I'm not quite sure about, but they did some movement. CXW going to be one from Friday. Got a triple upgrade, I believe, from 3 different companies. Had a nice little play on Friday. I might look for follow-through. INDO picked up at the end of Friday here. If I zoom in, there you go. You can see some of that Friday action. Whether this is going to be something I short back down or not, we will see. Same kind of move from HUSA, HUSA. Small price stock. Look, these are dead cat bounces likely, but they're going to give some opportunity for you day traders. DWAC, as much as I hate this company, is sitting at the higher end of this range. We'll see what we get here. They had some, whatever headlines last week that caused a little bit of action, sitting in this nice flag here, waiting to see what happens in DWAC. Acer is a small price company that's kind of starting to pick up, seeing some decent volume, seeing it at the 200-day. We'll see if anything happens here. And Veru is obviously in play several times, picking up. Now, some days it's choppy, especially a day like Friday. Really didn't do too much, but if you catch them on the trend days, there can be some really good moves in here. We'll see what we get from here this week. Some other stocks that are setting up very nicely, whether it be long side or short side, just technically speaking. We talked about the semiconductors, Nvidia, AMD, Micron. They look like they're setting up some fantastic opportunities for continued moves. Social media plays, obviously, Twitter is going to be in play with the whole Elon Musk saga. There are going to be more headlines on it this week, I'm sure. We're going to see what we get. Also, an important thing is we have 420 this week. Wednesday is going to be 420, so you could watch the weed plays, but I'll also watch Twitter, because what if Elon Musk decides to use 420 to make another play on Twitter? That would be his style. So couple opportunities you could watch there. Some of the other plays I'll also be watching is other social media. Facebook or Meta continues to bleed back off. I think this one's likely returning back to the lows. Starbucks, with all the issues they're having with unionizing, sitting back at this low here, feels like it's about to fall off another cliff. PayPal, after their CFO left for Walmart, returned back to the lows here. It's returning to that $100 level, and this one looks like its pain isn't done. Other stocks, AT&T finished its spinoff of Discovery, getting up here to the 200-day, suddenly waking up. It just went ex-dividend, so this one suddenly might have some interest and some hype behind it. Been playing Verizon in the meantime. It is above its 200-day as well, so the whole 5G sector here between these two seem to be picking up a little speed. Some retailers have been looking good. Lululemon crossed above the 200-day last week. We'll see if that one has any opportunity in it to present itself. Walmart's obviously been a strong one. Spent last week kind of chopping around, so now that it's chilled, let's see if we can get through that triple top or if we fade off from there. Those are most of the plays there. You could also, the AT&T spinoff was WBD. We had these descending highs that we broke and fail. So if we get back up towards this 2680, 27, I might try another play on this. We'll see if it can show any life and sustained volume. That's going to be the question. Those are a lot of those plays that I'll be watching. I'll also watch some of the earnings plays that I talked about, the commodity plays. There's going to be a lot of opportunity if you're a short-term in nature trader and you're managing your risk, you're taking your profits, and you're cutting your losers. There's going to be some interesting trading, and the market's going to be interesting as well. But good luck out there. Trade your plan, plan your trades, and we'll be here Monday through Friday at 1 p.m. Eastern to talk about things with you on the Vant Rant podcast show. And then I'll see you for the morning market analysis tomorrow. Enjoy the rest of your weekend. Get ready for some more trading, and as always, safe trading.